All right, everyone. So if that's all correct, if I set everything up right this time, I should be good to go. I see myself. I think I hear myself. Yeah, so I think we're good. All right. Just making sure I've tweeted that out and everything's good to go. I guess someone will tell me. Oh, primary input device changed. So that's working. Hold on. Make sure I can hear myself here. Okay. Confirmed. We are good. We're live on the series of tubes. So I don't want this to, I want to move that to there. All right. So if you guys are, if anyone's new here, essentially what we do once a week is go through some charts. So that's mainly what we're going to do today. We're going to talk about crypto. We're going to talk about Forex. We're going to talk about equity markets. We're going to talk about individual equities. We're going to build a list. If you guys don't know who I am, welcome. My name is Michael Noss. I'm a chartered market technician and quantitative trader. Just making sure everything's set up here correctly and that everything seeing is good. The other thing to note is that if you're interested in any of the tools that you're going to see today, link is in the description below. And that takes you to my website. It also has some affiliate links for the scanners and charts and everything that you'll see me use today. So if you check those out, or if you're interested on those from here, then you can look at that and that will help out the channel. Just, I always want to make full disclosure, they are affiliate links. I see a sweet, so that's working. So hello everyone. Thank you very much for stopping by. Also, that this is a preview for what I do on my channel each and every, or on my website each and every day. I've got a product that's just called Stats Edge Pro. You can go check it out on my website, and basically it is the output of everything you'll see me do today. So it's a list of charts and my thoughts of the market and a couple stocks that I'm watching. It's not a signal service. I don't really believe in that, so I won't tell you what to buy and exactly where and when to sell and exactly there. But it's more a separate point of view, or just if you're interested in my thoughts of the market, you get access to all my scans. You get access to a monthly Q&A webinar, which we actually did last week, and I thought was really good. It was like 2 hours and 45 minutes or something. So it was long, but got a lot of good questions answered, went over some really cool topics. Again, access to all my scans and a live chat room on Discord where we just shoot the shit about the market all day. So I think that is all the housekeeping. That would be very appreciated. If all 9 of you hit like, that would definitely help out the YouTube algorithm. I would like that myself. But now that we got all that out of the way, let's go immediately into the markets. And I do that. Oh, I've got this little, for any of you tech nerds out there, I've got this little thing now. So I can just hit a button. So if I hit that button, I can switch scenes. I think that's pretty cool. New technology. So as always, we're going to get started here with crypto. I usually like to start my scanning with the crypto markets, and then I go into FX markets, and then I go into the overall ETFs and the major market indices. And then from there, I come up with the stocks and the cryptos that I'm going to be interested buying or moving if they go through this week. So just make sure everything's cleared up here. Bitcoin. Am I on the right scene? I am on the right scene. Good. So Bitcoin, you can see here a couple interesting things going on. So I've been looking at this kind of bear flag look in Bitcoin for a while, and mainly saying that if it kind of validates this This 45,000 level, that's where I'm no longer going to see it as a bear flag, and I'm going to start looking at it because we've had this 45,000 area zone, and you can see kind of in through here, it's acted as a lot of resistance. But also, I saw Brian Shannon share this, and I find this interesting as well, is this is the anchored VWAP from all-time highs. So if you guys don't know, anchored VWAP is basically a moving average that takes out the, oh, should I use a 5-period moving average or a 10 or whatever, and it uses price and volume, and more or less it's showing you where the average market participant in any security is. So think of it like this. If you started buying Bitcoin around all-time highs and pretty much every day you bought, you dollar cost averaged into Bitcoin, weighted by volume, this would be your average price. And you can see how well this has kind of kept a lid on price action for a while. So not only do we have this trend line from the top of the bear flag look, which I keep saying look because it's not going to really be a bear flag until it breaks. And we also have the anchored VWAP from all-time highs here. So I really think we are at an important zone, and that's going to be the note. You'll see me write a lot of these notes and take a lot of these screenshots because, again, I pull all of these together in a nice little blog post every single night for just my thoughts on all these security. Right, so just need to pay attention, right? I think what happens here is going to be very important. I just got to shift that a bit. There we go. I think what happens here is going to be very important to Bitcoin, and I've mentioned this a few times in the past. I not only look at Bitcoin, but I also look at Bitcoin as like the index, so to speak. So how a lot of people look at the stock market, the SPY, to figure out whether or not it's going to make sense for markets to or stocks to move based off the overall index. I look at Bitcoin as the same way. It's kind of the index of markets. Now, so what I mean by that is it's very possible that altcoins or other coins can move up when Bitcoin is moving down and vice versa. But mainly what I mean is that it's going to be easier for all cryptos to go up if Bitcoin's going up, and it'll be easier for all cryptos to go down if Bitcoin's going down. So again, I treat it kind of like the overall index for the market, because for me, it's kind of like the most important thing to get started with, right? If that makes sense. So we're looking at Bitcoin here, and I'm actually just going to open up my crypto scanning list here within TrendSpider. So again, links for both of these programs, TrendSpiders and Trade Ideas, in the description below. I use each of them for different reasons. So I think they're both very valuable tools. If I had to bet on Bitcoin or Ethereum for the next move, I should get better at, where is this? For the next move. Well, I don't know. Is the next move up or down? Who knows? So again, Bitcoin, I think this is going to be a huge area. So if it gets through, that'd be pretty big. Ethereum, USD, and I try to do everything on Kraken because that's just the exchange I use. You've got the same kind of look. So where is the AVWAP from all-time highs? A little bit further to go, and you've got a lot of resistance here. My bet is they're probably going to move together, and you can actually chart, and I know you know this, but I think this is interesting. What about this way? Is this way better? Bitcoin, Ethereum, and we'll look at that in, so let's see, Binance. Yeah, so this is Ethereum priced in Bitcoin, right? So I obviously did some charting on this before. So basically, instead of Ethereum US dollars, this is Ethereum Bitcoin. So if this moves higher, it means either Ethereum's moving higher or Bitcoin's moving lower, or they're both moving higher, but Ethereum's moving higher faster than Bitcoin, and if they're both moving lower, then, right? So it's a ratio chart, they call it. And to me, this is kind of a little bullish looking pattern, right? You've got a little bit of a rounded bottom in through here. I'll draw this in like that, right? So that would be kind of your cup. And then you could say this is a little bit of a handle in through here. So you may be getting some Ethereum lifting, which is what a lot of the, the term in the crypto markets is alt season, right? When they see this, basically saying that the altcoins, which are anything that's not Bitcoin, might be the ones to move next. So might be, but looking at this chart, might be time for Ethereum to start outperforming Bitcoin. Now, for me, I'm not a Bitcoin maximalist or anything like this. I'm a trader, so they're all trades to me. Everything's a trade. I'm actually gonna just ETH looks strong. Rel to BTC. So I guess if I had to take a bet, and you're saying that you've already taken a bet on Ethereum, if I had to take a bet, I'd go with you. I don't have to, but if I had to, I would probably go with Ethereum outperforming Bitcoin in the near future. But I think that could change because Bitcoin's at just that such important level that we went over, right? It's got a high there that's pretty important. It's got there's a lot of things going on at 45,000. So I think 45,000 is going to be key for kind of the entire index there. Some other coins just right off the bat that I know I'm going to talk about. Luna, I'm in some. It's kind of pulling back a bit. Doesn't look the best. I think I'm going to look at Luna on a different exchange. Let's try Binance. Oh, that's AUD. Let's do, I don't know, Bittrex. Doesn't matter. There you go. You got a little more data there. And basically, I'm just looking at this big cup and handle. I'm involved pretty much here, so I'm about flat on it. My stop's going to be kind of in the 80s. The reason I like Luna over a lot of them is simply just because it's got relative strength, right? You're seeing when, if you compare this to Bitcoin and Ethereum, it should be hanging out right near here, but it's actually really near all-time highs. So I'm interested in that one. I did buy some of this Engine coin, and again, I'm just looking at this giant cup and handle. I bought some as it broke out in kind of the 150 area, so I'm up pretty decently on that. But I'm not as excited about that one, so I'm not nearly as big just because this one's been in more of a downtrend. The pullback here was more substantial. You well above this support at about 80 cents, but just more substantial in this one. And before people ask me, because people ask me all the time, I have no idea what any of these coins do. Nor do I really care. And it's the same with stocks. I'll generally with a stock try to know what sector it's in, and the main reason for that is to make sure that it's in a sector that's strong. Mostly it's to make sure that it's in a sector that I don't already own a bunch in. For example, if most of my stocks are oil names, I don't want to buy another oil name. They're all going to be correlated. And it's the same with cryptos. I really don't know or care what a lot of these things do. They're just charts to me. This TRX I never got triggered on, but I know I posted this in one of the blog posts. This just kind of descending triangle that had some support down here. It already would have been an amazing trade. I just liked it because you can see I drew out that it had a 15 or 16 risk reward, even if you sold under this all-time high. That was an interesting one, but I didn't get any there. I got a few on the weekend I'm sure I'll run into here. Not on the weekend, on Friday. The one thing I love about crypto is a lot of people say, I don't want to trade crypto because I'd be watching it all the time, where I'm basically completely the other way around, where I'm like, I like crypto because I don't have to watch it all the time. I put out my entry order, I put out my stop loss order, and then I forget it until something happens and my phone alerts me of something that's going on. So I'm just scanning through here and really don't see much else. Matic is kind of interesting. I guess I could draw a new support zone like down here. Just remove these. Right, because it seems to have held in this one, in this area for a long time, and now it's bouncing off there. So it broke this downtrend. It's got some resistance at kind of 166. So let's actually watch that at 166. Again, relative strength, looking for things that are trading more above recent action than anything else. The nuggets of wisdom that come out of you, my friend, are great. But yeah, watching any ticker all the time sounds like bad use time, 100%. And people, anyone in Stats Edge Pro will tell you in our little chat room and everything is I'm not there most of the day. You know, if people are asking questions and stuff, I'm there a bit, but I work on building new strategies and I work on all of these things during the day because I'm not going to stare at the market all day every day throughout the day. I do most of my stuff in the last hour of the day, and I'm just going to kind of shut everything out until then and work on other things. So there's Ethereum. You've got that overhead right here. So I don't really see a setup that would compel me to buy either that or Bitcoin now. But, this is the one that I got in. Mana, I forgot. So I'm just going to put, in case the people who don't come into the chat room, which there are a few, give them that chart. Basically the same thing. This mana, it's what, like 250-ish? No, 230, 225, 230. A lot of support in that area, 225, 230. Just broke the downtrend, so I bought a little bit somewhere around 250-ish. So, right, basically it's just a risk-reward play, right? If I'm long in through here and my stops down here, even if it didn't get anywhere near all-time highs and I got out of it, that's like a 5-to-1 risk-reward. That's the kind of trade I'll take all day. And relative strength in comparison to a lot of these other things, coiling a little bit higher, right? Solana, I think I got a little bit of this. I was waiting to get the rest above this area. You seem to prefer descending triangles to ascending. Is my perception correct? Yeah, I trade the triangles kind of completely opposite of the way that you would look at it in textbooks, right? So a lot of people would look at this and say this is a bearish pattern. I look at it completely the opposite way, where I think it's mainly, I bet you if you flipped it and you did all of the probability of success calculations, they would work out to be about the same. But the way I look at a chart like this is simply every time the sellers, they're coming in at lower and lower levels, but the buyers aren't letting it go any lower, right? And the main reason that I like that is because it just gives you this insane kind of risk reward play. You have a clearly defined area of support, and you're simply waiting for the people to change, right? The trend, the downtrend, you're waiting for that to change. So you're never just buying stuff as it's tanking. You're waiting for that to shift, and then at the same time you're saying, hey, if things are making lower lows, get me out. But you've got that kind of equal low. And it's really no different, like what's the main difference if the price action looks like this to make it a bull flag versus the price action makes it like this to make a bull flag? Right? That's very subtle difference. Instead of looking for higher lows, you're just looking for equal lows, right? So these two patterns, right? I just think it's really weird that in the textbook they say this is bearish and this is bullish. And it's like, I'm always just trying to trade in the direction of the overlying trend. So, if, for example, right, this was going on, I'd be way less bullish on something like this. Now, again, I still think you can play off a level of support, because I know you've heard this, me make this rant all the time, but I think risk reward is everything. So if I get a play where I'm like, okay, buyers came in like 4 times at, what's it, 225, $2 to 225 here on Mana. I know exactly where I'm wrong. If it breaks and it holds below $2, I'm out. I'm wrong. It's time to move on. And then the reward is just way higher. So even if I'm only correct on this 40% of the time, that's worth it to me. William O'Neill's birthday. Well, that feels like that should be like a market holiday. So you see the fuller holding of the descending. I don't look at it like, so I'm not going to enter something like Mana until I see a break in the other direction. So I don't predict the floor holding. It's more if the floor holds and we move and this pattern of lower highs stops, right? So this was the last high right in here. So I bought Mana as it broke that high because that was my lower high. So I'm not buying this support hoping it holds. I'm betting that it already held, and then I'm taking my trade. And then I'm just using that as a stop loss kind of thing. Looking to hold. Low is higher than holding. Looking for a low to hold versus a low is higher. Yeah, so it's basically just saying, right, again, if the basic theory is any consolidation, any way you draw it, technically speaking, right, based off, kind of the tenets of Dow theory, is that 99% of my trading can be boiled down to what is the primary trend, what is the consolidation, and then I'm going to have it break that primary trend. Right, so this is kind of what Mana looks like right now. This is your kind of horizontal zone, and this is kind of your tightening wedge pattern. But the theory is all the same. I want a trend, I want some sort of rest or consolidation, and then I want that trend to continue. I like buying something like with a little bit of a decline and a little bit of a pullback, because then I'm not buying it as it makes a new high, right? I'm buying it here as opposed to here, because, if you were to buy it here, your risk has to go down here. So you have like this big risk going on here. Or if you buy it here and your risk goes in the same zone, you're risking way less. And again, my whole theory is I will probably until the day I die have a 50% win-loss rate. So everything I do in trading is all about how to make it so that when I'm right, I'm really right. And then when I'm wrong, I'm really wrong. And then the other thing that I like, this horizontal resistance. So here's an example of one that really worked with this LRC. The same kind of thing, right? Now, this one doesn't look as good just because the downtrend has persisted. It's still above these highs back here, but the downtrend, has been going on for a lot longer. But again, still, so this doesn't look as good to me just because I would like it better if it happened up here. But the fact that it happens down here is still fine because you're not, right? This thing's not in a primary downtrend. It's like primarily flat. And again, my theory is if I'm only going to be right 50% of the time, if I pick this declining point, to me, there's way less people watching something like that than there is saying, I'm going to buy it when it breaks, this horizontal area. Right. So this could, again, you could look also this another cup and handle, right? Makes sense. Higher low keeps you guessing, but holding the low and descending decreases risk reward. And that's it. I would bet if the traditional ascending triangle, I'd bet you this break might work a little bit more. but it's fuzzier where your risk is, right? Is your risk right under this? Is your risk kind of in through one of these zones? Like, you have to kind of look at the structure of price a bit. But, when I see something like this, I'm like, okay, if we hold under that zone, I'm wrong. And it just makes it clear to me okay, if that holds, it's time to go. And that's the trade I like the most. Right? So here's another one, which looks like Mana, and it's Sand. I think both of Mana and Sand are virtual real estate plays. I think there might be a crypto nerd in here who would correct me, but I know Mana is, because that's Decentraland. I think Sand is another one of those virtual real estate things. And again, just lower highs, equal lows. So if this breaks, I'm going to be interested in Sand right in here. And then I know exactly if we break under that low, I'm wrong. It's time to get out. All right. I'm going to leave that up there for a second. For some shameless self-promotion. Brett is a buddy of mine. We've known each other for a while, but I did not pay him to say that, I promise. Actually, I'll leave it up there for another second longer. Just really. Piece of note as I'm scanning through this as well. This might be the last live stream in a few weeks. The best way to know that is to hit the bell below, and it will alert you when I set up a new stream and alert you when I went live. For those who don't know, I've got my first child on the way. The due date is next Thursday, but really could be any time from there. So if he goes on or before the due date, I'm basically taking 2 weeks off. For the pro members who are here, if someone doesn't go to the room, I've already kind of explained this in the room. This helium looks really well. I don't know if helium is on Kraken or not. The last time I checked, it wasn't there, but I'm going to check that one out. I really like the look of this as well. Game plan is I'm going to continue to do these nighttime wrap-ups, because that's how I'll keep my trading going while I'm off, and it only takes about an hour or so a day. I'll be in the room a little less. I'll be on my phone, check in a couple times during the day for 2 weeks. And then after that, I'll be starting to get into the swing of things if I'm not like dying of being tired, which I could see happening. I just need to chug a coffee just to get through an hour a day, as opposed to some people who have to work the whole time. So, and I won't be doing these live streams. I have 4 videos recorded, edited, and they're already up on the channel. So I'll be releasing, and they're all just educational videos because they can't be kind of timely content. And I'll just be releasing those on the channel throughout the day. So big round bottom here. I wish you're cheap. That was for I'm not paying them comment. All right. So back to market. So that's the way it's going to go. There'll still be content. It just won't be live, and it won't be about the markets now. Like, I have one of the difference between day trading and swing trading and investing. I've got one that I cut from a live stream about market breadth. I've got one about symbol list trading, that kind of stuff. So a lot of cool content that will come out on the channel, but I just won't be publicly facing it. I'm going to set up like them to go live at certain times, and the tweets will go live after that, and just keeping the presence up there while I'm off. Looking at the dollar, it's still continuing to grind higher. So this is UUP. I just put a note here that represents the US dollar. It's doing very well. I've talked about these for a while. I'm in GDP USD and USD JPY, and they're just insane. I personally have never been in a Forex trade that has gone this much. Forex trading is usually not, I don't want to say that easy, but it usually doesn't trend that much. Usually you get like tighter, like more choppy moves in Forex, but those two have been great. But I really don't see anything that I want to do in Forex. I'm looking at this Euro bear flag. It's gone for a long time. I'm just going to put some I am not currently short euro, but I will post the bear flag just in case anyone's interested. But everything just looks a little extended. Plus, you've got a bit of a risk. The headline risk right now in these things are pretty huge when it comes to the euro and everything going on in the world and all that kind of stuff. But it's just that this trend is really long in the tooth. But I don't know, a break of this area might end up being a good little scalp there. So into the stock markets, some things right away for the stock market. I've already looked at this. There's nothing tomorrow in the way of news. I don't think it's pretty light week. Job openings might be interesting on Tuesday. Yeah, but there's no Fed speak or anything like that. Jerome Powell looks like he's finally going to shut up for a few days, which is fine. When it comes to this chart, which I bring up from time to time, I don't have a theme set up that just shows my desktop. I keep forgetting about that, so I'm just going to push myself out of the way. This is basically all of the different sectors that make up the S&P 500 and how they do. The only thing that's interesting to note is that real estate and healthcare are the only two that were down this week, led by energy. We all know how crazy oil is right now, materials, and utilities. So utilities is very interesting because I actually really like, and our watch list currently contains a bunch of utilities. I've been watching this bull flag here. I've been talking about it for weeks within the Stats Edge Pro membership. But the breakout on Friday, I think, was pretty pronounced. So what we need to do is we need to just see if this holds. I think it's AEP that I have some of that I bought, I think, on this day. And there was another one. We'll go through it when we look at the list. But yeah, XLU is very interesting. Again, utilities for people, just because I know some people don't know what these sectors mean. But utilities, just think of water, power generation, power distribution, phone kind of thing. Right. And generally speaking, this is like the most, almost as boring as REITs, but like the most boring stuff to play. Generally speaking, if you're looking at utilities, it's not, it's not exciting stuff that you're looking at. You're not going to get like a utility that's like a hydro or a water generation company that ends up just doubling, right? It's not going to be fun. But if it's what's going up right now, it's what we got to look at. Mainly speaking, utilities, you'll get like dividend investors in because they usually pay out a lot of their income in dividends because there's no growth potential there. It's not like a power company is going to be able to deliver 10 times more power and they got to keep the money to do that or anything like that. So it's boring, but it's what's going up. So we have to keep in mind that that's what's going on. Block, which is transformational data shareage. I don't know why I started looking at that, but that's on my list. Wheat is kind of interesting. I was talking about the bull flag here. It's broken out of this. This is the anchored VWAP from this recent low. And if I anchor the VWAP actually from the breakout day, I think it is about the same. Yeah, that's why I like VWAP, is it adapts to crazy moves really well. So it's kind of holding above this. So I'm not going to put it on the list today, but interesting that could get another move in these things. KIE is, I need to make a note on this one too, because we had another breakout. And KIE is just your insurance ETF. So think of, again, any insurance company out there, right? Progressive, or I don't know if Geico is trading or what's going on there, but right. And what's the theme with utilities and insurance breaking out, right? The theme is boring shit. So boring stocks are moving. It's been the theme since 2021. I feel very sorry at this point for anyone who calls themselves a growth investor and will only invest in growth, because there's no way those people, unless they've been like hyper scalpers, there's no way those people have been making a lot of money. Again, it sucks, right? I would much rather play a Peloton as it's just doubling every month, as opposed to a utility stock that I'm hoping to make 5% on and take that money and move on to the next thing. But I would rather make 5% on a utility stock than hold a Peloton right now any day of the week. So, that's just kind of the theme that we're seeing here is boring, like VNQ, which is real estate. It's very, very interesting here. You've got this kind of zone that's going on in through here. Another boring name that could potentially break out is this real estate sector. I really think that that was a bear trap for real estate. You'll probably notice, I don't know why I have both VNQ and XLRE here, because I bet you they look exactly the same. Yeah, exactly the same. So actually, let's just take out that off the list. One less thing I have to look at each day. XLB, which is materials, but this is going to kind of come on the theme that I'm watching today, where it's just got a long way to get here. So I'm going to draw this, remove all segments. I always like to draw my support and resistance like this better. So it's moved. So it's moved a long way to get to resistance. And anytime I say that, I basically mean just that. It took forever. Oops. Didn't mean to do that. Put it there. Stop. Yeah, you can see how many days up here in a row are we? Like 1, 2, 3, 4, 5. Oh, we had a little pullback, 6, 7. So like 7 days pretty much up in a row just to hit this resistance zone. So I wouldn't be super confident that it's going to move all in one shot like that. That you're just going to crash through. However, this value breaking out note was made, I think, right here. And this continuation in Berkshire Hathaway is just amazing. There's always a new kid that comes on the block, and they always put Buffett down. And I'm not a Buffett style investor, right? Just not what I do. I go for shorter term trades and things like that. But man, you can't deny he's got to be the GOAT when it comes to just investing, right? The Renaissance Capital is the greatest of all time when it comes to trading, for sure, in my opinion. But investing, who beats this, right? Everyone goes in during the dot-com bubble. Everyone goes, "Oh, he lost it. He thinks the internet's stupid." And he's like, "No, I'm just going to keep doing what I do." And he kept doing what he did. And when the bubble burst in internet, he was fine. And then I remember in 2008, because I wasn't trading during the dot-com bubble, but in 2008 when I was trading, I remember the same talk, because he was down a bunch and he was buying a lot of these financials. Anyone who wants to hear, I can tell you, but he had like the greatest trade of all time with Goldman Sachs, probably going to go down as the greatest trade of all time. Everyone just thought he lost it again. Give him time, and he's always right. And same with, he refused to buy the gross stuff with Kathy, and everyone goes, "Oh man, has he lost it?" And right, look at him and look at Kathy, right? So she's just gotten hammered from 170 down to a low of 50, and old Burke, right, just can't stop him. All-time highs. New all-time highs on Friday. So just like we were talking about with utilities, so hitting. All right, so we're hitting resistance, but we're bid extended. We've, you guys, if you have followed me for any length of time, you know that I've been harping on this 420 area for support as everyone was kind of losing their minds that the world was coming to an end. I was saying, and again, for the Stats Edge Pro people, I think for like 2 weeks, my comments on the market was, as long as we're holding 420, keep watching 420 as long as we're holding 420. And I just had this chart with this zone here and this zone here. So we held 420. Now the real question is, we had this kind of double top up here. We had some resistance back here. So this kind of 450 area, it's a big deal. And we just ran a long time to get there. So if we just break through, this could be a FOMO rally to end all FOMO rallies. But, I wouldn't be shocked to see a pullback. I wouldn't be shocked to see some basing. Pullback or rest in the next few days. So again, the reason I write up all these notes is because this will go on the website as my thoughts on this chart. I kind of put my thoughts on every chart that I feel like I need to. It's generally speaking, when you get a massive move and then you hit resistance, the odds that you're going to either pull back or, just chop sideways for a few days is way higher, I've noticed, than if you grind your way up to that resistance and then break through. So I wouldn't be surprised again if we saw a couple days of pullback or something like that. Carl Icahn has a higher gain than Warren Buffett over the last two, but not as well liked because it's corporate raider style. Yeah. Well, again, I'm just talking like pure kind of equity investment. So yeah, I guess Icahn. Did you watch that? Anyone watch that documentary on, is it HBO? We have something called Crave up here in Canada. I saw it on there. I heard the guys, I listened to a lot of the Compound guys stuff. So Batnick and Josh Brown and all these guys. I really like them, even though they're not traders like I am. I really like the content they put out. And they were talking that they watched I think it's just called Icon. Documentary. No, that's not it, is it? No, okay, February. So that must be. So I think it's just called Icon. I've heard good reviews. I just don't know if anyone here has seen it. I've got it on the list, but it's one of those that the wife won't watch it with me. So I gotta find 3 hours alone that I want to sit down and watch a documentary, which just doesn't exist. So yeah, really nothing I see. So that's kind of my synopsis, I guess, of the stock market, is that we ran a long way, but then we just have been chopping sideways for a long period of time. So again, I wouldn't be shocked if next week is a choppy back and forth week. In this market, again, I always love the Mark Douglas quote, anything can happen. It is true. If someone tells you that something is definitely going to happen or definitely not going to happen in the market, I always just remind them that oil went negative, and that kind of will shut up most people. If something was bound to happen or bound not to happen, then how come oil went negative? No one expected a negative oil to a positive, a running grossly positive oil, I don't think. So Anything can happen, but I would not be surprised to see a pullback, some sort of a chop, right? And again, it always has to accompany some news that financial media makes up. So, it'll be, oh, everyone's afraid of inflation again, or whatever they're going to say this time. But as technical analysts, we avoid it entirely. And we just say it's a long time to get here to resistance. I wouldn't be shocked before we break these highs at 157 that we get a rest. If we break that, again, that will be surprising to me, but it will probably just confirm that the bulls are insane right now because they feel like they're insane right now. I think everybody is. This is the problem with the buy the dip crowd, right? Is everyone says you buy the dip. But then when the dip happens, everybody's afraid, right? Because which one was Evergrande? Was that Evergrande? One of those, and it was like, oh God, the Chinese economy is doomed. And then one of these things, right? There's always something that goes on with the dip that makes people confused. So just, again, support and resistance area on the chart, right? Anywhere from 427 to 416 or 17, that 10-point zone here. That's support for this market. If that we close and trade below that, I'll be more bearish. But until then, just keep going with it, right? So Al-Kakan was on the people paid to take on oil when it went negative. Not my style, but an interesting person. Yeah, that's why everyone says the documentary's interesting, because they follow him, and I guess he's a bit of a madman. So it'll be interesting to watch at some point. All right, so that is my thoughts of the market. Basically, everything is looking obviously very bullish, but we've hit this resistance. So we need to say what's going to happen. Now, if we roll over and finally break 420 after like the fourth or fifth time trying, then I think it's probably time to get a little bit nervous. But until then, I'm just going to stick with what I've been saying the entire time, which is, buy stuff going up, ignore everything else. The best part about this market I found is it's so bifurcated, right? This market, sometimes you'll get market. Like I remember in the 2008 crash, most things got really correlated. You still had oil and you still had some things that would move pretty well, but most things got pretty well correlated. In this latest pullback, you just had and same within 2020, you had such a bifurcation of the market, which I hope continues, because for us traders who focus on things like relative strength, it just makes life so much easier, right? If the market's going to split and there's always going to be a part that's strong and there's always going to be a part that's weak, it makes our life way easier, because all we have to do is go, okay, when during the pandemic collapse, it was stocks like Zoom and Peloton and DraftKings and all these things that were really, really strong. Now it's value names that are really, really strong. And again, I don't care which side happens, because we're traders. We're just going to go there. So these are the stocks that were from the watch list on Friday. I'm going to quickly go through them and see what to add and what to take off and what I may not like anymore. Slap on other data. Oh, I was playing with the Wall Street Bets mentions. Remove that. This AGCL, I'm going to keep. This Arch Capital, so that one's going to stay. AEP, I think we talked about. That took a second for those going. We talked about this earlier. I think this is time to take this one off. I'm in this one, but I just think it's a little bit stretched from the support zone to take the trade. So Vivo, this one's been a bit of a jerk. I haven't taken it yet, but I actually just still like the look of it. It's starting to worry me a bit, because this zone right here, $26 that I have is the area that I'm interested in. It's now on this day and on this day rallied really hard above $26 and then sold back under it. So I really need to see a close over that $26 before it continues, but that stays on the list. This VTNR I am fairly certain. Again, I don't have my broker open right now. The thing I liked about VTNR. Yeah, I took some there. The thing I really liked about it, this is one thing I love about trade ideas here. 50.52, so 51% short float on this, and this big giant cup going on right in here in the overall market. So, 1/5 of the float is short, and it's just breaking out of this bull flag here. So if this can continue, that's those shorts have got to get a little nervous. Cabot, I'm going to keep it. Hasn't really changed. This KR, I think I'm going to kill this thing. It's just so sloppy. So I'm going to get rid of you. I just don't. It's one of those kind of intangibles I don't like the look of. FTS, I probably wouldn't buy it here. I don't think I did. So I'm going to remove that one. Just doesn't look the best. D now, I am in D now. So I just want to make sure I track that. But that's got to come off the list. I can't have it now. I actually found this one from Brian Shannon. If you're not following him on Twitter, definitely he's kind of a mentor of mine. That's his book. Wait, right there. I actually have it signed. I've been following him on YouTube for almost 20 years now. And I got to say, if there is one trade that I would trade for the rest of my day, it is prior resistance acting as support. Right, it bounced off here. It had this kind of sideways chop. So above that is where I was interested in it. It's just you have good. It's just one of those things. I just love the look of it. It's probably works out the best for me. But again, I wouldn't buy it here. So that one's got to go. MRCY, not interested. OGE, I'm in some. Right, same kind of play. For the love of me, if I could find a automated way to do this, I would. I just don't know how I would ever build a scan to do that. I would have to define the support. Sorry, that's me thinking. Because if there's one thing that I could do again for the rest of my days across all instruments and all time frames, it would be look for something to break out and then pull back to that area. I'm just writing something. I have like a book. This was given to me by Trade Ideas, and it's just I use my iPad for it, but Jess actually used my iPad to edit all the videos that you see on the channel, and I think she's using that now. But so this is just basically a scratch pad of things to think about for those 2 weeks that I'm off, hanging out with the baby, because I just can't not think about things. And I'd love to build that. Like this OGE is great. I'm in somewhere in here. I can't remember. So it's called, call it 39. Already up pretty decent on that. AKAM, I'm not going to keep on there. So we're going to have a pretty long scanning session, I think. FE, that looks great, but I hope someone else got that. THC, I may have bought some of this. I'm saddened every time I look at THC and I remind myself it's not a weed stock. Like, who missed the boat on that? Aqua, I am back in. This thing's kind of chopping. But let's get rid of that one too. Let's just do kind of a clean slate. All right, so we have a much smaller list. We actually have 7 stocks on the list. And as always, I'll go up to 15 names before I go. That's enough. So we go over to my scanning platform of choice, which is also my order execution platform, which is Trade Ideas. Again, interested in any of those or more content like this, link is always in the description below. And let's start looking. So keeping in mind that utilities are looking interesting, that insurance names are looking interesting. So if I come across either of those and I see that and it's something that I like the look of, then I'm going to be way more likely to act than if it's really anything else. This is not a lot of price action, but nice push up and then kind of two choppy sideways days. And what you'll see me avoid anyway right away is anything that's just in like a awful looking downtrend. This App Harvest company, I don't do a lot of fundamental stuff, but it's interesting I think I heard someone get interviewed about it. One of the streams that I'm listening to, and they're basically just revitalizing the farming industry with like technology and vertical growth and that kind of stuff, which I think is super cool. Not that I'd take a trade off that. It's in a downtrend. I'm not interested. So far, it's a lot of stuff in downtrends. That sucks. This one looked kind of interesting. ASO, nice long uptrend from here. A little bit of a pullback, maybe a little bit more than I'd like, but a nice push up and then a little bit of a bull flag going on here, and it had 23% short float. But 23% short float, who cares if earnings are 2 days away? I can't take a trade off that. I know that ASTR has got a lot underneath it. Golden Minerals Company. So it's just a junior gold miner. Don't really like sub-dollar. Not a big penny stock guy. Not there's anything wrong with that, right? If you do that successfully, that's great. It's just not my thing. I think size of account and things like that have a lot to do with whether or not you can manage those things successfully. There was one that I posted on Twitter that I was bored and I was scanning. Again, my Twitter account is just Michael Noss, CMT. If you're interested. I also talk about the stream. Yeah, this one. I'm going to add this one right before I forget. I love this guy. It's just hilarious. If you made 300% in CMT, you can safely afford 250% mortgage on a house. Follow me for it's just a troll account, but it looks great. Yeah, this CPSI, I'm going to add this one. I found this on, I think, Friday. I was just bored and scanning around. CPSI. So they work in its computer systems and design. So I don't even know what that means, but. And then just what we talked about earlier about the holding this support at 33 and then this declining kind of top. And then that's in the context of this overall round at bottom looking play. Right, so if it breaks, I get a pretty tight stop. If it goes and it fills this gap up here, then that would already be a good risk reward. Not like it's something that it's going to be a super big move or anything, but so we just hit 34, 33. Just updating the watch list, the public watch list we have here. Yeah, just an interesting look. I just figured I'd do that before I forget. Yeah, he's got a whole series of financial meme troll accounts. I don't know if it's the same guy or if it's the same company, but there's 10 of them. and they're all absolutely hilarious. It's just such an awesome niche. It's like it's one of those things that you're like, I'm. It's cool that that exists. That like some guy out there was like, you know what's missing in the world, like meme financial humor, and the dude's a riot. So now he's got these massive followings on this account, like a Ramp Capital, right? It's just like, you know what the world needs is me just trolling the entire internet when it comes to finance, and just does it. And now that's a thing. I just think that's awesome. Like I was watching one guy on YouTube the other day, and what he does is he seeks out those like the Indian tech support scammer guys, and he puts on like a voice changer and he trolls them. And again, I just think it's a hilarious world where someone's like, yeah, I'm gonna just, you know, troll these guys who are ripping off old ladies for their life savings. And I think he like hacks them and stuff and tries to get as much information he can to give to authorities. And I just love that he's like, that's something I'm going to do, and then he can make money doing it. It's just super cool. Man, not seeing a whole lot that sticks out to me. And when I do, it's got earnings next week. So that's interesting. So probably means that there's either a big earnings week in general, or there's a big earnings week on the stuff that's meeting my bull flag scanning, just because, you know, their industries are potentially in a bull flag. I just want to, but yeah, I've gone through like 100 charts so far. To me, this is why it's so important to have a good scanning tool. Is that I know that there's like 3 scans that I'm going to do. I'm going to rip through probably like 500 charts doing them. It's not going to take me very long. It's going to take me maybe a half hour or so. And at the end of that, if I don't find anything I like, I just don't. I'm like, okay, I'm not going to put any trades. And that's all there is to it. Yeah, a lot of junk, a lot of chop and slop. OIS, that's an oil. The United States, that's an oil like ETF, isn't it? Looks good. It's going to move with oil though, right? So it's going to be no different from like the USO. It's actually underperforming the USO, so I'd probably like that better. USO, I think, is interesting if we can kind of break this area. That's how all of oil looks right now. Incredibly volatile, but if it goes, it can go. HRB. Weren't we looking at H&R Block a couple weeks ago? It's an interesting look in H&R Block. I think I may add this one to the list. Again, boring, but if boring is what's moving. No, I didn't have it highlighted here. 2 weeks until earnings. I kind of like the look that we have broken out of this type of zone in here. Let's move that a bit down, widen that a bit up. So we've had a lot of right resistance in through here. This zone, we overshot it here a bit, and now we're kind of pushing in there. So that's kind of interesting that this 25 area has been a pretty big deal for H&R Block. So if we can hold above it and then start pushing higher, that's something that's interesting to me. So we want to kind of break this little downtrend. So we'll say what, 26. 25, and that's not really. Not a huge mover on this one. Probably a really boring trade, actually. Oh, I'm not doing that. Oh, we do that later. So that's going to be a very boring stock. But again, if boring is what's paying the bills, then we'll keep doing boring. I feel so bad. And there's a lot of people out there that are so used to these Zooms and Pelotons and DraftKings and they're just buying these now awful stocks as they just absolutely get hammered. This HSIC, it looks good, but I'm in it. And I really don't like adding things. It was on the list before, I think, in this area. I think I'm in somewhere from around 85. So I'm not going to add that one, but it does look good. Should go to Sean like GRWG. Well, the beauty of it is if my buddy Sean likes it, it's not that he likes it. It's that the All-Star Charts crew like it. Because basically what the way that works, just because I know the guy, we're buds. The way that mainly works is that they go through and they show him a bunch of charts that they think are interesting. And then if he likes the look of it as well and the options line up, he builds an option play around it. So I actually watched the same video, and I think the bet they're making on this is they put down what's called a risk reversal. So it's a zero cost bet. So he basically sold a put and collected money for selling the put and used the credit from selling the put to buy a call. And when I say right, it could be 10, could be 100, depending on your account size. And the point being that if the stock moves sideways forever, they make a few bucks from the credit degrading on the put because they did it for a little bit of a credit. And if the thing rockets, well, the put's worth less and the call's worth more. So they end up making their money that way. I get it. If you look on the weekly chart, it's come down to kind of this support zone over here, and it's been basing sideways for a couple months now, from the beginning of the year anyway, and then it looks like it might be breaking out of that base. So it's basically just a nice rounded bottom. It's just not really my thing, but I get the idea, right? They're basically saying if it just chops around here for the rest of the expiration of their options, they'll make a few bucks, not very much. If it rockets, again, the thing about a risk reversal is if you're wrong by a little bit, you make a little bit of money or nothing, depending on. So say you sell the put for $1 and then you buy the call for like 95 cents. You're making 5 cents. So you'll make $5 per contract if you put on 10 contracts, right? You make like $50. So you make like a tiny amount. If you can do it so that you're selling the put for $100 and you're buying the call for 50, then you do that 10 times and you're making $500. If you're wrong by a little bit or if it just chops sideways. But if the thing rockets, then the put's essentially worthless. And then the call ends up making a bunch of money from it. So you end up profiting a huge amount for something that didn't cost you anything. So like one that they've done it on recently, I think was LNG. I watched. I didn't take it, but in this area here on LNG, they put on the same bet where it was just this really long base and they thought it was going to resolve higher. So they sold the put down here and they bought the call. And then when it broke out into this area, they're able to cover the put for near nothing that they sold. And then they sold the call or half of the calls to make a little bit of money. And then they're basically sitting on a free ride for the caller, right? It's the So it's an interesting way to play for sure. This JBH, I think I'm going to add to the list here as well. It's got earnings a while away. It's the same kind of play that I was talking about with the prior resistance becoming support. I've been watching this. It's been showing up in the scanner for a few days now. So JBHT. All right, and basically I'm just looking at this zone in through here. Right, resistance, resistance, support. And by the way, with the options talk, I've got a plan to hang out with Sean at some point and come up with a video series. The idea is with the video series, I've never really done anything. It's funny, there's a stack of books right there by my foam roller. Hey, Sam. And that is for a designation that I have in Canada called the Certificate in Derivatives Market Strategy. So it's like a 3-year designation, and it basically means that I've studied the crap out of like derivatives from normal derivatives to really exotic derivatives. So, options, I've studied futures, so I know all about like risk reversal and bull flag or iron condors and jade lizards and all this kind of stuff. It also goes over like the really exotic derivatives like CDOs and CDSs and all that kind of stuff. But it's one of those things that, yes, academically, I know all this stuff, but like anything in trading, it's real world that matters. So my plan is at some point to do this video series with Sean where I go, here's an algorithm that I made, and here's 10 stocks from the algorithm. Let's go through them, and then you tell me what one has the best option play to make and what is it and why. And I learn that kind of stuff as well. So I'm going to play with it. Basically, I'm going to open up like maybe a $10,000 account or something small to start with and just start, see what, can I make 10% a year on it with, I'm more interested in the premium selling side than the option buying side, just because I love the concept of, you make money just through the decay of the options, where there's a bunch of people out there who are just buying options, hoping that they're right in both direction and time. And you're kind of taking advantage of those people that historically it's like 85 to 90% of all options expire worthless. So you're kind of 210, 200. So you're kind of making money off. It's basically like running an insurance company, right? You make a lot of money, kind of tick by tick by tick, and then when you're wrong, which will happen periodically, that will cost you more. So it's an inverse risk reward. But again, if you manage everything correctly, the probability of profit's really, really high. So it's something I want to play with that I'm just new to, right? So a few questions I'm going to make sure I go through. And this, okay, so first we're going to start here. And also, if you have any charts you want me to look at or anything like that, while I'm scanning now is a good time to do that. Same with questions, because you're going to see me knock through. I've already gone through 200 charts, and I probably have another 200 to go. So, Brett, I'm not even going to say it, because you know what I'm going to say about this. I should say it, because there might be new people in the stream. But if you know, everyone else knows, and it's already priced in, right? So I don't care about that. Do I still use a Star Eater scanner? Yep, from time. It's just a candlestick setup, so it matters much more where it is in the overall chart. So it's a very discretionary. Do I use it during day trading? I don't. Again, myself, I don't personally day trade much at all. I have a few algorithms that I just kind of keep to myself that do okay and make a few bucks, but I'm 99%. When it comes to discretionary, I'm like 100% swing trading. So someone wants me to look at Zeus. Awesome name. Overextended for me. It's going to run with every other steel company in the world, right? X, for example, which was a TI strength alert here, I think, which is just a monster. But yeah, it's a little bit just overdone for me. Do I ever use cash secure puts to enter a long position or in the money call? I personally don't right now, but I want to. The thing is with cash secured puts, for example, is you're capping your upside, right? The only thing you can get is the value of the put that you sold. So if you sell the put for $1, you can only get $1. So I think where that would be the best idea to use that for is if you had a pullback algorithm, which I'm working on, that was like this thing's going to bounce for like a week. That would be an interesting way to do it, because if it bounces, you make money. If it chops sideways for a week, you make money. It's an interesting way to talk about that, where essentially, if you guys don't know, when you sell a put, it just means that, so if I sell a put right now in, I don't know, let's go into this one. If I sell a put on X right now at $29, I would make some money for that, and I would profit as long as by whenever the put expires, the stock's trading above $29. Now, if it gets under $29, I have to buy it at $29, but I still get to keep that premium that I received. So the way to kind of look at that would be if I could come up with an algorithm that says, okay, these stocks are pulling back. And I think a lot of you guys, if you attended the Q&As, you may know the algorithm that I'm thinking of that does a pretty good job of nailing pullbacks, even if they're only short term. You would make money if it pulls back, and even if it does this until it expires, you make money. If it rockets, you make money, but you're capped. So it's interesting. I haven't played with it yet, but again, I like the concept. Now, buying the in the money call, I don't like myself. And it's because the opposite thing happens. Every day that goes by, theta, or the time decay, is eating you. So it's one of those things that, like, if you gave me a $10 million account tomorrow, I would probably do 90+% of my trading selling premium, because I'd be okay with, cutting that small consistent profit, but I would do the same kind of trading I do now. Like, I don't know, let's just use Mana because I'm thinking about it, but of course you couldn't do this unless there's an option exchange. I don't know about that you could. But like Mana, right? In this kind of area, you could say, I'm going to sell a put down here, and then if it rockets, you make money right away. If it just chops around here for another month, then you still make money. So your probability to profit increases, but as I always say with trading, everything is a trade-off. You're doing that because it caps your overall gain. So again, it's interesting stuff to think about. What I always argue is that trading options is not an excuse for not having a charting trading plan, right? It's just a different way to express the same trade that would have different risk reward benefits, right? This would be for retirement or long term to buy stocks to hold dividends. For a retirement account, I would put for me, that would be more of a covered call strategy, right? Because if you're buying things like utilities for dividend stocks, right? You're buying utilities and utilities are going up, and hopefully you're not using a retirement account like a lot of people do, which is to say, I'm just going to buy a bunch of stuff, and if it goes down forever, whatever. I would be more interested in covered call strategies, right? So, if I'm long AEP on this breakout, which I am, and this was something, for me, you guys know that I basically say just go out further in time. Yeah, exactly. Good chart, but want longer term, better average. Well, again, you're only going to get filled on the put if it goes down. And as was mentioned here, it doesn't necessarily, if it ticks below the price, it doesn't mean you're going to get assigned on it, right? It's usually if it's at the end of the assignment. But basically the way it would work is you need the stock to go down. So if your strategy that you've tested is about buying stocks that are crashing, then that's going to be the best way to get your cash secured puts, or if you're buying pullbacks. But I would say more if you're interested in long-term investing, again, the way I look at it is you just zoom out your chart. Your risk reward should be the same. Your risk reward profile should be the same. All of this stuff should be the same. You're just saying, hey, I'm going to hold this for a longer period of time. So, my stop's going to be wider, my profit target's going to be wider, my trailing stop's going to be wider, and I'm going to use a longer term chart. That's the way I look at it anyway. But I think a covered call strategy would be interesting as well, right? Because with AEP, for example, let's go to here. I like how much more of this data Trade Ideas has. So we're talking dividends, which again, give me a $10 million account tomorrow. I'm selling options and I'm collecting dividends, and I'm looking at weekly charts and doing nothing else because I'm lazy and I don't need to manage it as much, right? So 3% or so is what you're making a year on AEP. Well, again, if you're bullish on the stock and you're long the stock and you're making your 3% dividend yield, you may be able to make another extra 1 or 2% by selling out of the money call options on it. And then again, what you're getting paid for there is capping your return, right? So if AEP rockets, which it can, anything can happen, then you're going to cap your overall return. You're going to get called away if the thing moves. But again, you're going to continue to make money. And then what a lot of people will do is the money they make from the covered call, they'll put back into the stock, right? But it's interesting. But yeah, if you had a pullback strategy, right? If again, prior resistance here becomes support. So if your plan is to look for things in uptrends and try to nail pullbacks, then there's nothing wrong with selling puts down there, knowing that you're not going to make all of this if this happens, right? You're going to sell your put for whatever the premium is there. And then if it rockets forever, you're just, you make that premium, but that's it, right? So again, trade-offs for everything. You get that premium that just decays over time, but you're capping. And that's the other thing, is that people who are buying calls or buying out of the money calls are basically paying a premium, and they're paying that time decay in order to get unlimited upside. So for me, you'd only buy calls on things that you're just insanely bullish on, that you think they're going to run and they're going to run now. Or you want to use it as a way to express leverage, right? Some people will use in the money leaps, which are just long-term options. So options that are like over a year in expiration. And they use that because they can control more of the stock for way less money. But again, it's just all trade-offs. But for me, it's like I'm 35. I've been trading forever. I've got a pretty good income from many other sources. But I'm piling a lot of that into my account so that eventually my account is big enough that a very small percentage gain is more than enough to live off of. And then again, I would transition at least some of that. And I'm to the point, that's where I'm interested in trying this now, where I'm to the point where I could comfortably, I believe, make a decent income off trading. And by comfortably, I mean if nothing happens for 6 months, I'll be fine, and that doesn't draw down my capital enough, blah, blah, blah. But I want to start playing with this other income generation thing, because it comes to the point where, if you have a $10 million account and you want to hold 10 stocks at a time, well, now you're talking about you're buying like $1 million of every trade you want to make. And that might not be comfortable for you, right? So that might be when you say, okay, I'm going to have, this account, which has a certain amount of money in it, which is my trading account. And I'm going to have this amount of money, which is a certain amount of money. And this is going to be like my options covering account. And I'm going to have this account over here, which is a certain amount of money. And this, I only look at weekly charts and longer term trends and things like this. So it's kind of like a diversification of strategy, which I'm doing more and more of. So right now I've got a retirement account, which I do more longer term kind of things in. I've got my trading account where I do a lot of the stuff from Stats Edge trading in. And I've got my day trading account where I run these algorithms in. And it's just each time one of those buckets get too big, I use that to fund another bucket, right? And then some people say, well, you should go into real estate. And I am just too goddamn lazy to manage a real estate property. So what I would probably do is just buy a bunch of REITs and sell call options against them, because you're going to get the same, a comparable return. Maybe down the road when I've got absolutely nothing going on, but between, YouTube and Stats Edge Pro and Trade Ideas and all the stuff that I do on all these different things, and then new baby on the way, it's like I just don't have the time to go and manage a tenant and all this kind of stuff. But there's periods of time where it's we've talked about this on one of the Q&A live streams, where there's a guy who has he talks about strategy diversification, right? So baby on the way, new house in 3 years max, maybe. One thing that I'll do is I talk to a guy who in my neighborhood is a real estate developer. And I just asked him, it's a question I ask everyone that does everything that I'm somewhat interested in. I always ask, what is the biggest mistake you've ever made? And the reason for that is just simply, I want to learn from the biggest, someone asked me the biggest mistake I ever made. It's, buying stocks in downtrends or buying penny stocks. And he said his big, and again, developer, I mean, by developer, I mean, he would plow out the land. Like I live in the middle of the woods, right? I'm in rural Canada, right? He would plow the land, and he would get the piping installed, install the septic tanks, and build the houses and run the power and all this stuff. And then he would sell them. And he owned in our main city. It's not very big. But he owned a bunch of properties in there, and he said the biggest mistake he ever did was sell those properties so that he could develop more land quicker. And he said, if I looked back, those properties alone, he said they would probably be worth about 15 million. And he's like, I did that about 25 years ago. He's like, so I would have rented them out. The mortgage would have been well paid by the rent by now. So they would have cost me nothing. And I would be sitting on about $10 million worth of assets that would just be paying me like $50,000 a month, because on top of upkeep and things like that. He's like, so one thing I've learned and that I'm going to take is I don't think I will ever sell a house, right? I would, this house is nice. It's got a completely separate up and down, so you could, in theory, split it into 2 apartments. There's a elementary school like 2 feet away. So when you say 3 years max, I don't think so. I think we'll probably be here for a lot of elementary school, because it's like a 2-minute walk up the road. NOV is interesting. How much oil do I own right now? I'm going to add this one, I think. It just looks too nice. So I think we'll be here for a while. But yeah, I wouldn't sell this house. That might be how I would get into earnings. It's 23 days. I'm not going to push it. Yeah, so I would, so he basically said if I never sold a house for the rest of my life, he's like, I wouldn't have developed as much property as I did because I wouldn't have had the capital to do it. But it's one of those that doing less would have paid way more in the long run. He's like, I just would have given those out to a management company and paid them whatever percentage a management company takes on the top line. I would have run them basically income free. So I would have dumped whatever extra money either back into the mortgage or back into the development of the property. And he's like, I never would have sold a house ever for any reason, which is very interesting. So it's one of those things that's like, if you're successful at this and this is what you do for a living, I want to know what your worst mistake was to make sure that me, who knows nothing, never does the same thing. But as Sam was saying, it's a pain to own residential properties. Like, I certainly wouldn't. It would be like, here's a management company to deal with it, right? Speaking of real estate, so you're saying options on the REITs not as active. Yeah, you could probably sell some. Maybe you'd have to put limit orders. Maybe you'd have to work the orders, but dividend yield about 2% on 2% on that. Ooh, that's disgusting. I'm sorry. I just drank like a bunch of creatine before we. We're in the same boat. We want to move out, but it makes no sense to sell our current house. We can rent it for almost twice the mortgage. But we do not want to manage. I would look into, make sure they're well reviewed. But what he told me is he basically said there are management companies that's what they do. Like, if they get a call that the toilet's backed up at 3 a.m, that call doesn't go to you, it goes to them, right? If there's something to be repaired, that doesn't go to you, that goes to them. Bringing the people in and managing them, they take care of that. And in return, they make a percentage of the top line. So as long as that would fit into your budget, the way I would do it personally, and this is all, right, again, my income is fine, right? So I don't need additional income. For me, it'd be more about keeping the asset for income later. You would say something to the effect of make sure that here's the rent, here's the mortgage, here's the rental fee, here's upkeep, and then go for there, right? Wait until you see what they bill for repairs. So Sam's got some experience here, so he may be contrary to me, right? Again, full disclosure, I've never, because it's to the point now where I can still make more of a gain and more of an income trading than I can. But there will be a point where that gets uncomfortably big, right? Again, if I continue to trade, that moment that you bring up a chart and you're like, oh, it looks really good here. And you're like, well, I took a trade, or at least I watched it here. I don't know if I traded it. And that was gross. And then I watched it here and you got a little bit, but that ended up being gross. It's like, do I want to try again here? I think I'm gonna. So yeah, it just becomes the point where, again, it's all personal finance stuff, right? Which, again, I am obviously not a financial advisor. I'm some bearded dude that lives in the woods that you found on the internet. But for me, it's how much. It's all about how much the cash is worth to you, I think, right? So we're going 91, 50, and then stop maybe 88. Oh. Right, so it's right. What is, and again, I don't understand your guys' tax code either. So our rule is that if you live in the house for, I believe, 2 years, you don't pay tax on the gain, and that's going to be different depending on where you live, right? But again, for us, so you also have to look at that. How much is the government going to take if you sell it versus rent it out? So it is really all about, and that real estate's going to go up. Now it's going up like crazy, but on average, real estate does like 2 to 3% a year. So your appreciation on the property is not going to be very much. So the question is your income on the property going to offset that? And, all these different, again, I trade, I don't, Shopify. Every time we get into tech up here in Canada, it never works out. First is BlackBerry, now Shopify's tanking. Here you can deduct the interest rate on your mortgage for taxes. So, yeah, we can kind of do the same thing here. Like this office is basically written off because talk about it, I guess. I put everything through a corporation, right? So everything I make from every source out there gets funneled through a corporation. And then this is like the corporate head office, and there's all the write-offs and everything that come from that. If you ever looked up the income of me as an entity, it's not very good. But then it's just our corporate tax rate up here is 13% in Canada, and then our personal tax rate is way higher. So anything that I can do for 13%, I'm going to do, as opposed to something that's going to cost me way, way, way more if I end up doing hitting it personally, right? So just rub it in there, eh? Just rub in the Nortel, then BlackBerry, and now Shopify getting killed. We should just stick to what we do up here in Canada, which is sell oil and trees. Yeah, Nortel. My dad is an accountant and owns an accounting firm, and he had a lot of people who had a lot of hard times during that Nortel. They wrote it from everyone was a genius and everyone was making money all the way up. And he had a couple clients that absolutely refused to sell when they were, multi-millionaires on paper. And then it crashed down to zero. And he said he had a couple with BlackBerry too. It was like, this company's everything. It's never going down. This is going to be the greatest thing ever, forever. And the thing just rockets and rockets and rockets. And them basically using that as collateral to buy things and all kinds of things that make no sense, and then holding it on the way down, which is, maybe it's some of those stories that ended up shaping me and the way that I trade, right? Is because if you talk to those people now and you said, what was your biggest mistake? I bet you a lot of them would say holding, right, not selling these stocks when they started to turn. And you're never going to get the top of them, but there's a moment where you got to go, okay, it was going up forever. I made a bunch of money. Now it's not. Time to hit the exit and move on to the next thing, or just take the cash. But yeah, he said he knew one guy who went from basically zero to a multimillionaire on paper and back to zero. He held it the whole way up and the whole way down. And he said he felt so bad for that guy because it was just an emotional roller coaster for him, right? Just would not pull the trigger, would not, put in I think $100,000 or something like that of his hard-earned money. And, he was going deep into debt because he's like, I can always, at any time, I can sell my Nortel, so I can have a Ferrari and a giant house and all these things. Because if I just sell my Nortel, then, everything will be fine. It's good to see MRCY, which we have on the list, and THC, which we have on the list, still in the bull flag scanner here. Yeah, so we ended up, taking all this debt and doing all this and saying, I'm fine, I can make the minimum payments on this. And if I ever feel stretched, I'll just sell my Nortel, and it will more than cover all of these things that I'm looking at. Okay, so there's NOV again. So it's just telling me to do it. So I don't think we have a lot of oil names on the list right now, so one can't hurt. So we're basically just playing this kind of flag right here. Yeah, and then he crashed it all down, and then he couldn't afford a lot of the things that he bought. And had to sell a lot of them, and so of course if you're selling cars and stuff like that, you're doing it at a loss, and just really sad stuff. Which I think is one of those things why trading gets such a demonized, lumped in with gambling and stuff, is because there are a lot of people out there that use it as a way to gamble. They don't have a game plan. They don't have an exit strategy. They just, I'm going to buy this thing and I'm going to hold it, right? And the most recent example was probably AMC and GameStop, right? And you see it on Twitter. For those of you, I don't think Brett's on Twitter at all, but you see it every time this thing pops up a bit. They go, okay, here we go. Now it's on. Now we're going to get the short squeeze of all time. And then it rolls back over. And it's been, right? Oh my God, we're going to break the system. Everyone's going to be a millionaire. Oh crap. Oh, we're going to break the system. Everyone's going to be a millionaire. Oh crap. Oh, we're going to break this. Oh crap. Right. So now they're looking at this little pop and they're going, man, we got them this time, guys. And it's sad. Like, I think diamond hands is going to be the new harmful trading saying, just like I think buy low, sell high is a very hurtful saying. People saying buy low, sell high, I think is just really mean because it's just not the way the market works. So this one's interesting. It's a bit of a slow burner. It's another crude oil trade. You know what happened to Zim last week? I have no idea. Went down. I don't. As the news, something must have happened here. I have no idea. Oh, did Zim pay a... Yeah, that one paid a special dividend. So I don't think it actually went down. I think I heard that somewhere. And just looking at the dividend yield, it says 14%. Makes me think that they paid a special dividend. I can look it up for you. Yeah, okay. So that Zim special dividend. Integrated Shipping declares $17 dividend. So here's a good lesson for people. So that high was 88, and then it opened at 74. So basically what they did is they just paid out a bunch of money. And, that's great. If you were holding it, you received this fat dividend. But the market corrects, right? The market just corrected on that. So this isn't really a gap. They just took from their equity and they just paid it out in dividends. So then anything from kind of the end of this day on is the stock pulling back, but that gap wasn't really bad news. I don't know where I heard that. I don't know why my brain remembered that. This one doesn't look great to me. TTM, it's just under. It's got all of this prior support here, and it's under that now. So this is kind of setting up like a bear flag. So if this breaks lower, that might be a decent short. And RADA. Just a little overextended. It's a good long-term look, right? If you had gotten that base break, that would have been good, but I wouldn't buy a stock that's up like 20% in a single day. I just look at that and I go, okay, well, missed that one. Move on to the next one. That's why you notice a lot of stuff I'm looking at is stuff that's in uptrends, but in bases, because I want to be the guy who gets it as it's going, not the guy who comes in after that 20% move and buys it. Because really for that guy generally is going to have a harder time than most. There's Vivo, which we have in there. All right, guys, any other stocks that you want me to look at? I really didn't find too much to add, but it's getting to the point where I've probably hit over 500 charts. And if I'm not seeing anything that's like punching me in the face after 500 charts, I'm probably best to not push it, right? It's one of those things that I've just noticed over time. If I sit here for like 3 hours and scan through charts to find a list, it's not going to be nearly as good as when I just like it hits it right away. CIVI. Resources play looks good when it breaks out from here. Again, a little bit overextended for me. If I owned it, I'd probably just, put a stop under that and then away you go. But I just wouldn't. Again, I'm not going to buy anything that's up that much that quickly. And I think what's going on, the reason I'm not finding anything is this. So I'll do a little rant about this, I guess, to end the stream. Again, if you got any more charts you want me to look at, go ahead. But there comes a point where when the market has rocketed this much, if you're buying stocks, you're either buying stuff that's lagging, which means it hasn't broken out yet, which means that it's going to be underperforming the market, or you're buying stocks that have already run. If they were moving with the market, they're a little bit overdone. Because I talked about how I think, as we near this resistance and we're in this kind of resistance zone, I just trade ideas. You can't draw these zones. We've took a long shot to get there, so I wouldn't be shocked to see a pullback or a sideways move. So if I'm buying stocks up here that are already run, then when the market's pulling back, they're probably going to pull back with it. And if I'm buying stuff that hasn't broken out, then it's relatively weak. So that's why I was okay adding something. I added one from the oil name because it kind of looked like this as well, right? So again, it's just too much. Basically, if you're buying stuff that's run with the market, you're probably buying overextended stocks. If you're buying stocks that have been pulling back or haven't been moving, you're buying stocks that by definition are relatively weak to the market. And for me, I like to always buy strength. I always want to be where the money is, right? VECO, that's interesting. Could go. I think the SMH, the semiconductor index, looks interesting. Again, some relative weakness as well, right? ATSG. Well, I have no idea if anything's going to be good for long term. Again, make sure you're trading everything based off your trading plan. Now, the chart is strong. It's broken out to new highs. So, again, I don't... First thing you'll know about me is I always say, I don't know anything. Anyone who tells you they know anything is lying to you. But it's broken out of a nice base. It's a decent-looking chart. It's broken out of weekly highs, generally speaking, and that's a good thing when your stock is breaking out to new highs. So it's not a weak name, that's for sure. Yeah, I want to see the SPY consolidate from here and maybe pull back a bit and see some patterns. I'm with you. I'm with you there for sure. Right? I 100%. We've ran a long time to get there. Again, if we continue, all the better. I'm mostly invested in things right now. Like I've got most of my swings are full because we were still making lists and buying things around that 4,200 or 420. But yeah, it's just moved a little bit too far too fast. So again, a pullback wouldn't surprise me at all. So I'm just gonna hope for that. If it continues to run, then I own a bunch of stuff, so I'm making money anyway. If we pull back and rest, that might set up some more stocks to give us an opportunity to buy more at that same time. So as always, I'm going to take off now, guys. I appreciate it. If you guys could leave a like on the way out, that would be fantastic. For you Stats Edge Pro people, I'm going to take all the charts that you saw me take screenshots of. I'm going to huck them into the blog post, and I'll post in our trading room when that's done. If you're interested in any of that, link is going to be in the description below. Check those out. If you're interested in the software I use, link is always in the description below as well. That takes you to a software page on my website, and then click around. There's a free trading course on that website, so if you're interested in that at all, you don't need to sign in or put in a card. It's all on YouTube. It's just in that spreadsheet or so. Go there as well. Again, I may be here next week. I don't know. It's not up to me. It's up to the baby. But if I'm not, right, nothing happened to me. There'll be videos out throughout the week. And again, the plan is 2 weeks after birth, take that off and then back into the swing of things. So Thank you, everyone, for coming out. Again, if you can hit the like button on the way out, that's fantastic. Everyone, enjoy the rest of your weekend, and I will talk to you guys soon.